Hi, welcome to the Market Alert for Thursday, the 13th of March 2025. So bond yields, big tech, bullion and black gold bounce as stagflation fears ease. The gap between micro FWD, EPS and macroeconomic growth is widening according to yesterday's news. US stocks mostly gained following softer than expected CPI data, but with the upside capped as growth and tariff concerns lingered. There is going to be certainly a cap on the upside for growth with these tariffs. Stocks see light relief on soft CPI while bonds sold off the latest tariff announcement. So let's have a look, see what the last tariff announcement was. US tariffs on steel and aluminium take effect with no exemptions. EU, Canada announced incoming retaliatory tariffs. Soft US PCI, federal budget widens more than expected, and Bank of England cuts by 25% expected. That must be today then. Putin likely to eventually agree to truce, albeit with his own terms. It'll be interesting to see how long that lasts. Hopefully it will. And crude stocks build less than anticipated. So there we go. Let's have a look at today's news. Now we haven't got the Bank of England today, which is interesting. When's that going to be then? Is it next week? Yes, it's next week. So I don't know why that's being played at the moment, but Bank of England official rate to be cut next week by the looks of things already. Try to buoy the markets a bit. But today we've got core PPI month on month and unemployment claims, so not much news today. And then of course yesterday, if we can get the right place, let me just do this and then go back a day. Now we'll get them. So you can see the inflation numbers yesterday all coming out lower than forecast, again known as the CPI for a good reason. Right, let's have a look at the market's reaction to this and see how this played out during yesterday. And kicking off with the Dow, you can see yesterday we took out the low there at 41,174 was taken out yesterday, so we have a new low with the green line there. So let's just drop that one in so we can see where the support is today. We're at 41,001, so 40,000, a very important level, as seen yesterday by the market bouncing off this area. But overnight there's still some weakness. But before we do that, let's have a look at the weekly chart, see where we're at. We also tie in with the 78% retracement there as well, as prices could move lower below the 50 EMA as well, which has been a while since that's happened in the down there as well. So 30-minute chart for yesterday, market sort of bit of a positive in those CPI numbers, but then sold off, which you can see there. We then had a debt cap bounce up to the close and the 50 EMA, and at the moment the market sideways to lower. Market will need to hold from this low up to here at the 78.80, but more importantly that low of 41,000 is going to be very important for the Dow. And in the German DAX, sideways for yesterday, inside bar actually as well, so it didn't take out the previous day's low or high, so the market becoming a bit more calmer and less volatility there. In the 30-minute chart, nice move to the upside in the morning, no surprise there. Following the CPI numbers from the US, the market pulled back, but then also had its dead cat bounce, and overnight the market pulling back there and currently holding from this low up to this high at 78% retracement, which you can see there, and prices holding there as I'm actually recording. And in the S&P 500, starting off with the weekly chart, the market down at 78% retracement at 5559. And in the daily chart, you can see we've still got red bars all the way down despite having some climactic volume there. So the market's still showing weakness, and again you can see, similar to the Dow yesterday, the market's spiking up on the CPI numbers down and then consolidating in the afternoon. But overnight the market down there at the moment at heading towards the low as well. So again, if we just draw in some fib retracements from there to there, you'll see this market too coming off the 78%, and there's some bit of volume picking up there now on the electronic market as well. Meanwhile, in the UK market also showing an inside bar for yesterday, so a bit of a calming of the volatility, sitting at the 200 MA level, not 200 MA, at the 89% level there at the moment, 78% as well, but on, like I say, an inside bar there, so a drop in volatility. Yesterday morning, spiking up, coming all the way down, retesting again. You can see the volume there, market reversing off this, and then pulling back for an 89%, 78% retracement, and then moving down to the S1 there, where it's currently found some support. Meanwhile, the US dollar continues to trade sideways to low. It has traded below that 103 level, so let's just drop that down. 103.23 now is the next downside target for this market there. Just trading above that at the moment, but that's where the support is at this time. Let's have a look at the metals for yesterday. And silver allowed to move up, but it's been stopped overnight. It's got to take out the 33.36. I'm sure at some point this market will be allowed to move, but at the moment it's still being pressured. It needs to get through the 34 level, which you can see there. If it does, great. But don't forget, tomorrow is Smackdown Friday. It could be Smackdown Thursday when you look at the 30-minute chart at the moment. They've done well overnight to bring this market down already. So get ready for the 130 slam like yesterday. Did recover well from that, though, that's for sure. And yesterday it was allowed to move up until 130 and then thereafter. But at the moment, watch the low being retested for today. Meanwhile, in gold, sideways to higher, nowhere near as much on the sell side as silver. No surprise there. And 30-minute chart stopping at the close at the moment. And you see some buying coming in there to support the gold price. It's getting close to taking out the all-time high, which is why it's probably consolidating there as well at the moment. So if we can take out the 29.54, then we can head up to the 3,000 level, and that's when the fun starts, as I've mentioned before in the alert. Right, let's have a look at the gold-silver ratio, and this says it all. You can see that we're stuck in a sideways range now for this market, and again, what's interesting, it's not even come down and retested the lows to the left either. So for me, it's about starting to trend back up to the upside there, back towards 92. Right, let's have a look at yesterday's trades. And in the pre-market session, we had a bit of a sell-off there, 100 points down. Like I say, still making big moves in the pre-market. And you can see there the market going back up to the 20-bar moving average failing and then breaking through just before the cash market opened, when we see prices consolidate for a moment or two and then come off the close and then drive through the 200 MA, the DP, and then move higher when Lagarde was speaking yesterday. So obviously the market appreciated whatever she said, and prices continue to climb up for 200 points. We then had a buy signal there, sell signal that wasn't filled, and then we just moved up a bit more following the last one there. And then through the mid-mornings, the market again climbing back to the upside. And if we look at the lunchtime with the CPI numbers, the market spiked up, but then came back, and then in the afternoon there was potential sell signal there that wasn't filled. Just wind that back so you can see it. There we go. And then prices sideways, moving lower, and then spiking up again. I don't know what this was yesterday afternoon because there wasn't any official news item out. The main one was the CPI numbers, but it did just spike up there. Prices then becoming sideways, and then eventually we get another but potential buy signal, which is not filled, but the sell signal is, and then prices moving down, as you can see there, as we got into the close, heading back to the DP, and then getting a bit of a bounce off there, which is no surprise at all when you see these little spikes above the average there as they buy back into the market. And finally, the overnight market is sideways. How far away are we from the high and low? Well, we're not that far. We can see that that's 150, just over 150 points. What have we got on the upside? To the high, to take out the previous day's high, 200 points on the upside. So plenty there to move the markets. And as I say, yesterday we were an inside bar. We didn't quite get up to the high, which was 300 points away from where the market closed the previous day. So again, at the moment inside the range, as you can see, and a bit of weakness there. But don't be surprised if they try and pump the market up from the 7 a.m. or from the 8 a.m., which it'll do one or the other, vice versa, at those times. Right, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.